Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 25th, 2026, and we're diving into the financial results of Lineage, the world's largest global temperature-controlled warehouse REIT. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Lineage's performance and their strategic outlook for 2026.
Let's start with a brief overview of Lineage's recently released 2025 full-year financial results. What stands out to you?
Lineage reported a flat total revenue of $5.35 billion for 2025, with a GAAP net loss of $113 million. Despite the challenging industry conditions, they managed to increase their AFFO by 22.7% to $865 million, which is a significant achievement.
Revenue and profitability overview. Let's delve into the revenue and profitability figures. Lineage's total revenue remained flat at $5.355 billion, but they reported a GAAP net loss of $113 million. John, can you explain the factors behind these numbers?
Certainly. The flat revenue indicates that Lineage maintained its market position despite economic headwinds. The GAAP net loss of $113 million reflects the impact of increased costs and strategic investments. However, the 22.7% increase in AFFO to $865 million shows their focus on operational efficiency and cost management, which is crucial for long-term sustainability.
And what about the AFFO per share?
The AFFO per share increased by 2.4% to 3.37 cents, which is a positive sign for investors as it indicates improved cash flow generation and potential for future dividend growth.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 60, but Lineage reported an actual EPS of 3 cents. What are your thoughts on this discrepancy, John?
The actual EPS of 0.03 cents fell short of the forecasted 60 cents, which can be attributed to the higher costs and strategic investments that impacted their bottom line. However, it's important to note that their adjusted was $327 million, with a margin of 24.5%, indicating strong operational performance despite the earnings miss.
How should investors interpret this in terms of future performance?
Investors should focus on the company's ability to generate cash flow and manage costs effectively. The adjusted EBITDA margin suggests that Lineage is maintaining operational efficiency, which bodes well for future profitability as they continue to execute their strategic initiatives.
Operational efficiencies and future outlook. Lineage's CEO, Greg Lehmkuhl, mentioned strong execution and operational excellence. How does this reflect in their future outlook?
Greg Lehmkuhl emphasized their focus on operational excellence, which is evident in their 2026 guidance. They expect adjusted EBITDA to be between $125 and $130 billion, and AFFO per share to range from 2.75 cents to $3. This guidance reflects their commitment to cost control, efficiency, and leveraging their network to meet customer needs.
What strategic initiatives are they focusing on for 2026?
Lineage is concentrating on administrative cost management, CapEx efficiency, labor productivity, and energy efficiency. These initiatives are designed to build durable, long-term value and position the company for sustainable growth.
Key takeaways. In summary, Lineage has demonstrated resilience in a challenging environment with flat revenue and a GAAP net loss, but a significant increase in AFFO. Their strategic focus on operational efficiency and cost management is promising for 2026. John, any final thoughts?
Lineage's ability to maintain operational efficiency and focus on strategic growth initiatives positions them well for the future. Investors should keep an eye on their execution of these plans and the impact on profitability.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Lineage's performance in the comments below.